Hey everyone, and welcome to Earnings Cheat Sheet for Friday, October 18th. It's Alexis, Garcia, and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. All right, Ed, so we got some big ones on the horizon. What do you got for us this week?
Some really big names. We have Tesla, we have ServiceNow, and we have Lockheed Martin, and that's just the tip of the iceberg. There's so many and so many big names that we cover, and we're going to look at a number of them, of course.
All right, well, let's steer towards that iceberg, shall we? And start with Tesla. The EV maker is scheduled to report Q3 earnings after the close on Wednesday, October 23rd. Earnings are expected to fall 15.5% to 60 cents per share, while revenue is seen climbing 9% to $25.4 billion. And here's why we're watching Tesla. We'll want to see if core auto margins are stabilizing yet and figures on full year delivery target. We'll also be on the lookout for more information on an upcoming affordable EV model. So Tesla just had their big robo-taxi day event earlier in October. Many were calling this a make or break moment for the next chapter in Tesla's growth story. And it seemed by the stock reaction that maybe investors weren't that impressed.
They weren't that impressed, though. When we look at the stock chart, you can take a different perspective on it. Obviously sold off there. So I think this earnings report, presumably we won't get as much, at least new stuff on those longer term projects, the robotaxi, self-driving, the Optimus. I mean, they could, but that it seems likely to be more about the here and now. So what are we going to get? Margins probably didn't stabilize. I mean, just the fact that it doesn't take a whole lot of math to look at revenue is up and earnings are down, that probably suggests margins are down as well. So they want to see some signs that, but it's getting closer to stabilizing, and maybe turning around. We'll see. Do they want to see about maybe that? What can they get? Can they match like fourth quarter delivery numbers, which was a record level? There had been some hopes of that. They are seen to be providing some generous incentives, which wouldn't be great for margins, but could do that. It does seem likely that that sales will be down, deliveries will be down from last year, and then there'd be, if there's any kind of, really it is about that affordable EV, because there's two big drivers for next year. It'd be a Model Y refresh and what this affordable EV, which is probably some variant of a Model Y or Model 3. So if that's supposed to come out in the first half, or at least production supposed to start in the first half of 2025, those are presumably the growth drivers that the Tesla will be relying on in the short run. So I think that'll be really important, because there's always a mix. You want to see something now and you want to see something later. And Tesla was promising some stuff later, and you can argue this or that about it, but this is going to be more about now and the near term.
Right. And as you mentioned, Elon Musk has really been prioritizing the robo-taxi over this affordable EV model, I think, much to the chagrin of some investors. So hopefully we can see more details of that soon. But let's take a look at the chart, because you said maybe this would give us a new perspective. We've seen it here. It's basing cup with handle with a 264.86 buy point. But what are you looking at here, Ed?
Oh, and look, it sold off a lot in October. The deliveries, while they were sort of in line, depending on what consensus they were, they were China heavy, which is not good for margins. And then the robotaxi wasn't good. So that was all not good. But if you look back to April, that last drop down, not the super drop down, but back in April, it had really sold off. And that's when people talked about that the next generation model was going to be canceled. Elon Musk said that's a lie, but then basically said, well, basically implied that, oh no, that was true. But that's when he talked about the robotaxi. So if you think about the perspective of where did the stock go from there? Yeah, there's other things that happened. Okay, you could argue, so it wasn't just that, but the stock is up a lot since he sort of seemingly at a spur of the moment said we're going to have a robotaxi event. So yeah, it's down, but from where we were at 140, I think that was, so it's not clear. I mean, how negative things are. People are still betting on it. There's still a huge divergence between the bears who think this should be worth like $20 a share, and bulls who think it should be 300, 500,000, 10,000 a share. So that'll continue. That's not really on the plate for this earnings call, probably. I think the affordable EV, which is sort of, it'll be interesting to see how that goes. And it's not clear how that will go. It might do better in certain markets than others, but we don't know anything. We have not seen any pictures of it. I think we'd love to see a picture of basically Tesla's big project for the next couple of years, and we still don't know what it looks like.
Now, looking at this weekly chart here, 'cause as you mentioned, it closed down here between the 10-week line, the week ending the 11th. That was the week of that robo-taxi reveal. And it looks like it's trying to claw its way back up. But if you're an investor that's, has that conviction with Tesla, what are you then looking for as a possible entry on earnings?
I think you need to see at least really breaking the downtrend handle. It's pretty steep too, and it's deep. So it's not, you want to see some real progress on that. You have to remember earnings calls, and it could be either way. Like this could jump on earnings and then reverse the other way. That has happened, or the other way. It could sell off overnight and then reverse higher. Because again, so much of this is perception. What do you believe is going to happen? Do you believe that these things are going to happen or not? And so you can see a lot of swings on that. So I think you'd want to get well above the, say, the 21-day line, but it's tough. That's a pretty deep, steep handle. There'd still be a lot of overhead resistance, if you got above that. But waiting to say 264 would be a long way to go. So it's not ideal. Honestly, it might be good if it just came up toward the top of the handle, then pause, but that could be the process over several weeks. So I don't think it's not a very good looking chart right now. And I will say the expectations are that earnings will rebound next year. But again, that relies on the Model Y refresh. That relies on that affordable model. Those are really what people are hinging on, and that the price cuts and incentives will stop. And we just don't know yet. So there's that. I think investors would like to see some signs that things are going to get better on the earnings and sales front. And setting aside talk for the moment of these longer term aims.
All right, Ed. Well, let's move on to the next name on our list, and that's ServiceNow. The cloud computing company is also scheduled to report Q3 earnings on Wednesday, October 23rd. And earnings are expected to climb 18% to 345 per share, and revenue is expected to jump 20% to $2.75 billion. And here's why we're watching ServiceNow. We'll want to hear updates on AI traction, and investors would also like clarity on the risk to federal contracts related to the CARES soft probe. That company is a partner of ServiceNow. Looks like they're getting looked at by the DOJ, Ed. So, what is going on with ServiceNow that it's on your radar?
Well, this is one of the very first software makers that'll be reporting. We also get SAP from Germany a couple days earlier, which is also relevant because they also are related to have dealings with that reseller that is involved in the price fixing probe. So that'll be relevant for that as well. But ServiceNow is also one of the main software makers that seems to be getting momentum and actually with end users on generative AI. That's not easy. It's one thing to have the chips. It's one thing to have software that deals with the networking or some kind of basically still the backbone of AI, but to actually make money off of it, ServiceNow is showing some signs of that. And so people will want to see that all the way up the food chain. I mean, you'll want to see it for ServiceNow and other software makers, but all of them, because ultimately you need to make some money off of this. Somebody does, or you end up with some kind of bust, or the spending levels will slow all the way up. So that's important. Again, want to see if that price fixing probe, which may end up mean nothing, but it could slow contracts. It could just mean that while we're waiting for the outcome, it could mean that ServiceNow loses some government contracts, or not loses, but government contracts, are just sort of held up and frozen for a while. So those are relevant. ServiceNow is one of the better performers. It's a steady performer. So you wouldn't expect big surprises either way. The stock may move a lot but if they had a real downside surprise, that could be really negative for the market because it is such a steady performer, because it's on the forefront of these things.
Well, as you said, investors, when it comes to AI, show me the money there, right? We want to see that cash coming in. And ServiceNow also saying it would invest about 1.5 billion in the UK over the next 5 years to build out those data centers to really fuel that AI growth further. And so let's take a look at the chart here because this one is hovering above a buy zone after a recent trip to the 21-day line. So, what are your thoughts about the ServiceNow chart?
Yeah, it's pretty well extended here. I mean, I think one could imagine that if earnings were strong and it bounced, say, off around the 21-day line, that might be an add-on entry for people who already own something, but it's really not there. I mean, I suppose if we also look maybe on a weekly chart to see if it could come, how close is it to the 10-week line? It's got some distance. So uh,
About
it
4%.
about 4%. So I mean, I suppose it could fall and then bounce back, but that may not be a really appealing action with the so little time before earnings. So maybe an add-on buy point, but it does feel somewhat extended. This may be just one you have to wait on. It moved out a few months ago. It did sort of get near the 10-week line a couple weeks ago, but now I think you just sort of have to wait maybe for a new base or a more significant pullback.
Right, and as you mentioned, we have pretty impressive growth here for the next couple of years. And we've seen kind of earnings maybe decelerate, but overall, ServiceNow really delivering kind of consistent, solid numbers here.
Yeah, and while a lot of techs don't have the relative strength lines doing that well because it's had a nice run, that RS line is right around highs because a lot of tech sort of lagged while the S&P 500 was moving higher. This is doing very well. So it really is a leader right now. So definitely one that investors should be paying attention to, even if there isn't really an opportunity to get into it too easily.
All right, well, let's move on to the next name, which is Lockheed Martin. That company reports earnings on Tuesday, October 22nd, and the aerospace defense juggernaut is expected to see Q3 earnings fall 4% to 650 per share, and analysts expect revenue to climb 3% to $17.37 billion. And here's why we're watching Lockheed. We'll want to see signs of rising defense spending worldwide and if there's been any fallout from the Boeing strike. So, Ed, talk to me about Lockheed. We've seen rising tensions in the Middle East. How is that maybe affecting cash flows for them?
Well, we should see, like because of all the attacks and worries about war, that's probably going to build up spending Mid East and it's obviously Eastern Europe and Ukraine. You're seeing some more defense spending. Lockheed Martin really hasn't seen the revenue growth. I mean, it's the sales or the earnings growth. It's been pretty sluggish. So there are a ton of defense firms coming out, a lot of them with fairly sluggish earnings. There's some other smaller names that may be higher, but it's a big, big week, and Lockheed's one of the first. So that's another thing. Just tons of defense firms coming out. This will set the tone. If Lockheed says positive things about defense spending, even if Lockheed itself isn't surging out, if it doesn't have massive growth, it may be a positive sign for these others. And yeah, there's the Boeing strike. And while Lockheed doesn't work too closely with them, they do have some joint projects. And so there could be issues that things are stalled. And if they say that, that would be bad for Lockheed, but it would also be bad for some other companies with alliances and partnerships with Boeing.
Right. And let's take a look at the weekly chart, Ed, because this one looks pretty extended. We had this 4 weeks tight area here, but Lockheed making some really strong gains since the middle of the year.
Yeah, really impressive, especially given that the fundamentals have just been okay. So you have to ask yourself, is that really going to keep going? I think if you look back to 2022, when the Ukraine war began, when Russia invaded, there was a big spike, and ultimately you could argue that it largely held those gains, but it did give up a lot of gains initially pretty quickly, and then it's sort of gone sideways. It didn't really turn into some massive long-term stocking. So it's possible that Lockheed has made its run and won't keep going. So even if the results do well or even outperform, that is a risk that how much more can this go if the earnings aren't going to pick up substantially.
All right, Ed. Well, those were a few of the big ones on our radar, but let's go to lightning round, shall we? Because there's plenty of more reporting next week. Let's take a look at Freeport McMoran. That miner reports next week. And let's switch over to the daily here. This one in consolidation with a 55.23 buy point. Looks like it's kind of drifted off the last few weeks. So what are you looking for here as it looks to maybe find support at that 21-day line?
I mean, you want to see, yeah, break from a technical level, you want to see it breaking that handle. That is a handle. That would be a legitimate buy point. You could see an entry. The problem is that a lot of the rise and a lot of the fall is related to China. there was all this China stimulus, and so you saw a lot of miners and China stocks look worse. They went much higher and then have come back, but this has given up a lot of its gains. The US being pretty strong is a nice offset to that, but look, China's the one that uses all this copper. I mean, they're just churning it, just so much demand for industry, for EVs. So that is what you need to, in some ways, it's sort of out of Freeport's hands. You're going to see the results, but you know what copper prices are, and so people have a pretty good idea there. So I think we need to see that rebound, and we need to see some improvement in China's economy before this one takes off.
All right, well, let's take a look at another miner that's Southern Copper. And this one kind of similar action here. It's in consolidation 129.07, but looks like it's kind of have a little bit of a handle here. But again, this one right below that 21-day line. So what are your thoughts with Southern Copper?
Same thing. I mean, this one has had a little bit better results, a little more strength, but it just needs to get above, at least break above much of that handle. And there's that handle, but that's what it needs to do. And again, but a lot of it's in China's hands.
All right. Well, let's take a look at GE then, Ed. This one also reports next week. And this one looking nice after a recent breakout. So, what should investors be looking for here with GE Aerospace?
This has just been a steady performer. I mean, it's really, I mean, it had real strong gains, held the gains, and now made another run really strong. This one's benefited from Boeing's woes because a lot of GE's sales are in aftermarket repairing old jets. And Boeing isn't shipping many jets now, and they are having trouble with it. So you're seeing aging fleet. So that's been really positive for GE. Strong performer. This one's extended. There's not really a place where you can enter. It's had some opportunities here and there. I guess it cleared a 3 weeks tight a little while ago, but that was maybe an add-on buy. But now with earnings coming up, I think you just have to wait. There's not really an opportunity, probably in the near future.
Right. And as you mentioned, nice earnings growth here over the last few quarters, and the estimate for fiscal year 2024 up 30%. So some strong, solid fundamentals here. RS line looking pretty strong as well.
Yeah, absolutely. Strong technical, strong fundamentals. It's been really an impressive stock.
All right. Well, let's take a look at a couple industrials. Let's look at Caterpillar. Tell me about this one, Ed.
Probably flash some, from a technical perspective, probably flash some early buy signals, but is now above the top of the base, sort of consolidating. Maybe that could be treated as a high handle depending on how that works out. This is one, it's a little bit like some of the defense names where the earnings haven't been tremendous. People are seeing maybe a brighter future out there, but it's like the earnings are supposed to be sort of sluggish for the next few quarters. So it'll be interesting to see, can this stock stay high if you're not going to see the fundamentals be tremendous. It's not like this is like a superly richly valued company, but you'd like to see some growth in there as well out with the stock at highs.
All right, let's take a look at United Rentals, and I'll switch back over to the daily here to see better. But yeah, this one again, looking a little bit extended after a recent breakout. So what should investors be looking for here?
I think they should, well, look to see if that performance is there. And this one has a little bit better earnings estimates going forward, doing well, but it's extended. So probably not an opportunity. But both of these stocks will give an idea about the health of the economy, health of some of the sort of the earth moving and construction sectors.
All right, let's take a look at a couple of healthcare names, starting with HCA Healthcare. Again, this one looks like it took a trip down to that 50-day line and is maybe trying to hold above here on this 400 level.
Yeah, these look really well. That there was probably a buying opportunity if you were really bold, but even then isn't a lot of time before earnings. And now, maybe if it pulled back to the 50-day line over time, but earnings are coming out, it just seems extended. But this has been hospitals have doing very well. And actually some of the negative news for like the companies like United Health probably is positive because United Health is saying we're spending a lot of money, and hospitals are saying, hey, people are spending a lot of money. So, that seems to have been maybe a partial catalyst for why hospitals are doing well, and a lot of them are doing really well.
Right. We can see this relative strength line here really gaining some traction over the last month or so. Let's take a look at another healthcare one that's Universal Healthcare. Um, Similar looking chart here, Ed. We saw this pullback. This one really broke down below that 50-day line, but has really surged back up in over the last week.
Yeah, as I recall, and I don't know, there's some kind of legal or potential legal issue that may be one reason why it sold off so much. But yeah, it's come right back, and the volume has been decent on the way back. So it was really heavy volume on the way down. I don't know, if people think that's not that big of a deal or what have you, but that's coming back. Maybe you could sort of treat this as a base, like maybe if it came up and sort of paused, but it's been so up and down, it doesn't feel like a very nice chart right now. But the price action ultimately has been positive over this year, but it just feels a little wild here.
All right, well, maybe this one can tighten up a bit. And let's take a look at Vertiv Holdings. They do digital infrastructure equipment. And this one, again, looking really nice after that breakout. So, what should investors be looking for here?
Now, this is interesting because we aren't getting the big data center plays really, that'll be the next week. We'll get Meta and Amazon and Google and Microsoft. Those are the ones with a lot of the data centers, but Vertiv cools those data centers. So that's why it's taken off. It's been one of the biggest AI plays. It sold off and now it's broken out. It's extended, not much you can do. I think you're supposed to see some decent growth. Growth is picking up again on the revenue side after slowing. It picked up in the last quarter. I think it's supposed to be pretty solid this time. And earnings have been, while slowing, have been still very strong. You're going to, it feels a little bit out there. Maybe you could form a high handle, but that would require it to not really move on earnings and sort of sit around for a while. So it's not right now actionable. I think people are going to be looking for what do they have to say about data center growth. I mean, I think people will pay a lot more attention to what the actual hyperscalers say next week, but it'll give you a little clue heading into that. And we have a few other cooling plays that are out next week and in a couple weeks. So this is going to be important for that.
All right, Ed, why don't we take a look at home builder Pulte Group? What are you noticing here with this chart?
Yeah, home builders have held up pretty well. I mean, given that interest rates ran back up, they ran up when rates came down, and they've held their gains. I mean, you didn't know how that was all going to work out, but as you look at that chart, it's been pretty tight on a weekly basis, despite a few weeks of some pretty strong rebound in yields, still well off where they had been. This is right at highs. That's it. It's a pretty short consolidation. Maybe there'd be an add-on buy point. It sort of feels like it's not that long for a new buy, especially if this pops up on earnings. And you do have to watch out for home builders are definitely one of those that they often seem to go one way overnight and if they open and then reverse the other way, whichever way that is. So you may think it's safe as houses, but housing stocks can be pretty volatile on earnings.
All right, let's take a look at Las Vegas Sands then, just to finish this up. We're still on the weekly here. This one reversing lower this week. Maybe looks like a little bit of a handle, but you have an official buy point here of 55.66. So, what's interesting to you about Las Vegas Sands?
Yeah, and probably after this week, that handle will show up on a weekly basis at least, and maybe on the daily as well. Uh, this is sold off a lot, and so it's coming up. It's sort of like the first rally, which isn't ideal. It's nice. We often like to see after a big drop to see a prior uptrend and then a base form. So that hasn't really happened here. On the other hand, while it did take off with all those other China-related names, because this is mostly a Macau, most of its revenues from Macau, but it really has held its gains where almost all the other China plays, and we looked at some of the miners and the China direct stocks have had huge sell-offs in the past week or two. So this one's held up very well. This is the first one of these Macau plays. So let's see how this one does. It's supposed to be had really strong rebound in 2023 as China finally got out of COVID, but it's still pretty strong growth, for the current year and for next year. So, that this is one more than others where, if it goes through this handle that's forming, that could be buyable. Obviously, with the knowledge that it's not an ideal base because it's run up a lot, but this one could be actionable, knowing it's gambling a little bit, as it were.
Well, Ed, thank you so much for your insights today. That wraps it up for this episode of Earnings Cheat Sheet. If you want more market analysis, tune in to Stock Market Today with Alyssa Corm. That goes live after the closing bell. Thanks so much for watching, and we'll see you here next week.